Everyone assumes banking is safe. You need expertise, you need qualifications, you need years of training just to get in the door. So when people talk about AI replacing jobs, finance never makes the list. But here is what the data is actually showing right now. Finance is losing 28,000 jobs a month, and the banks responsible are staying very, very quiet about why. Let's talk about what is actually happening. JPMorgan, Citigroup, Goldman Sachs, three of the most powerful financial institutions on earth, all three have publicly stated that AI will eliminate some of their jobs. Not might, not eventually. Will. And yet, when workers ask directly, the answer they get back is restructuring, efficiency improvements, strategic realignment. Nobody is saying the word AI out loud to the people losing their jobs. Here is where it gets interesting. Finance seems safe because it requires human judgment, relationships, trust. But look closer at what most finance jobs actually involve day to day. Customer service representatives processing account queries, bank tellers handling routine transactions, insurance claims processors reviewing standard applications. These roles make up approximately a quarter of all employment in financial services. That share is larger than in any other major industry because the job losses in finance are not showing up the way most people expect. There are no mass layoff announcements, no dramatic headlines. What is actually happening is slower and quieter. Someone leaves. The position does not get refilled. A team of 8 becomes a team of 5 over 18 months, and nobody calls it a layoff. Yale Budget Lab research confirms it. AI is affecting employment in finance first through slower hiring and attrition rather than broad-based job cuts. The jobs are disappearing, just not loudly. And then there is the number nobody is talking about. The tech sector and finance sector combined are now losing 28,000 jobs per month. That is not a prediction. That is current government payroll data. In a labor market that created over 113,000 jobs monthly through May 2026, tech and finance dragged the entire total down significantly. This is genuinely productivity replacing workers, but a lot of it is cost cutting by firms that have committed enormous investments to AI and need to show returns. These banks spend billions on AI infrastructure. The easiest way to justify that spend is to reduce the headcount it replaced. The roles most at risk are not the analysts making complex investment decisions, not the relationship managers closing major deals. The roles disappearing are the ones that process, verify, categorize, and communicate standard information. If your job involves following a decision tree, AI can follow it faster, cheaper, and without a lunch break. The question is not whether AI is coming for finance, it already arrived. The question is whether you will notice before your position quietly stops being refilled. If you want to understand the systems reshaping your industry before they reshape your career, subscribe. We break this down every week, no jargon required.